Yeah, I think this is the biggest scandal against my fellow citizens.
Oh, my name's Jim Sheridan. I'm a filmmaker. I've been lately doing documentaries, and I'm very interested in the whole homeless banking, distressed mortgages world. And I'm here with a man called Ben Hoey. And Ben Hoey, who are you?
I'm primarily a banker. I've spent most of my life in banking, investment banking, overseas. My last major role was Chief Financial Officer of a investment banking's derivative platform. So there's not much I don't know about banking. I'm Irish. I left for London many years ago, came back and started to look into the mortgage scandal from the crash.
You've used one word already that I hear, and I think I know what it means, but derivatives, what does that mean?
Oh, it's just what bankers call breaking down risk and pricing. So even a simple product like a mortgage has a number of risks that are separately priced. Nothing the consumer would ever understand, but it's very important when understanding misselling, which is what we're here to talk about.
Are you in the justice world, trying to get justice, or what?
Yeah, I guess that's the business I'm in now. When I came back from London and started to look at the Irish market, I teamed up with a couple of people who were trying to help a situation with the amount of vulture funds and the amount of sales of consumers' mortgages to vulture funds. We teamed up together, and our intention was to offer an ethical solution to the banks in dealing with their non-performing mortgage loans.
Or I'm going to say what people say, right? Say this is just a bunch of whingers who bought a house, they invested, they tried to make it work, there was a crash and now they're whinging.
Yeah. Well, a mortgage is like any other product. It's nothing special. And like all products, they're sold. And Irish people were sold mortgages pre-crash. Most of those mortgages were unsuitable. That is the missale.
Okay, that's interesting. So are you saying to me that I go into a shop and I buy toothpaste or I buy a car, a mortgage is the same?
Yeah.
See, I had the idea that a mortgage was a burden.
No, it shouldn't be. It should be an asset. It's something to enjoy. It should, if it does what it says on the tin, it should be something to enjoy, like a new car.
But are you buying a car on the hire purchase when you take out a mortgage?
Yeah, effectively. But you're buying the car. Let's forget about the finance. Let's take a car. If you go into the sales area and the guy says, I'm going to sell you a car. Look, it's fantastic. It moves along the road. It varies in speed. And you get that car home or it's delivered to you and you find it's no wheels. That's a missale. Because he told you it was going to have wheels and it doesn't have wheels. So you go into the bank and you say, I want to buy a house. And the bank says, well, you'll need a mortgage. You'll need a loan because no one can afford a house outright.
Okay, go back to your selling the car. I feel like Ali G. Okay, you sold me a car, but like, you know, it can go 120 miles an hour. And I went 110 and I crashed. And that's your fault because the speed limit was 60.
No, well, I didn't tell you anything about speed. I just told you what it was capable of doing. How you manage within the rules is your business. The issue is what was said at the point of sale, what was discussed around the point of sale.
But people will say they just drove too fast. They borrowed beyond their means.
No, they were sold money that they could not afford. There's a big difference. No bank allows you to borrow beyond your means. That's just not on the record for mortgage lending. You need to step back and think why banks love mortgages. It's a heavily regulated environment.
Mm-hmm.
And as a result of being heavily regulated, there's a lot of benefits the bankers get from the regulator in terms of lower amount of their own money they have to put at risk. So bankers love mortgages and they love selling them to consumers because the more they sell, the more money they make. So they are selling these. So when someone walks in the banker is obliged to follow all the rules he's agreed with the regulator in how he sells that mortgage, what risk he gives the consumer. So if the banker doesn't check your affordability, he's broken a basic rule that he's agreed with the regulator.
Who is the regulator?
Ultimately, it's the European Central Bank who sets the capital rules. I mean, when we talk about regulators, there's all sorts of different regulators. In Ireland, there is an issue in that we have only one regulator. In the UK, there'd be the Bank of England, which would regulate banks and their strength. But you would also have the FCA, which looks after consumers' interests.
FCA stands for?
Financial Conduct Authority.
Oh.
And conduct is a key word there. In Ireland...
So we don't have financial conduct.
We don't
have any conduct.
We don't have anyone looking after the consumer in Ireland for financial products. When you think of it, the
consumer can end up in court.
Consumer can end up anywhere because he's no one looking after him in what is a very technical area. And if he does seek justice, if he feels he's been wronged, he doesn't have access to any technical expertise. While in the UK, you would go to the FCA and they would manage the complaint. So, yeah, the Irish consumer is left on their own, which is why we've got this significant issue with 250,000 people whose mortgages have been sold to private equity.
I'm just trying to understand this, right? So in 2007, no mortgages were sold, right?
Well, a lot of the banks and lenders would have originated the mortgages and then packaged them up and sold the risk on the securitization market, which is where other people take the risk.
Yeah, before 2007?
Yeah, it's part of how you fund mortgages.
Okay.
It's a very smooth operation. It's a factory. You know.
And what changed that vulture funds had to come in?
Well, after 2007, they realised over 200,000 mortgages had been missold, were bad mortgages. People whose circumstances did not change defaulted. So they were always, if you're missold a mortgage, you will eventually default because it's unsuitable for you.
But people will say the world changed, the world collapsed, the economies collapsed.
If your mortgage was unsuitable in 2006 or 7, it was still unsuitable in 2012. No matter what happened,
okay,
it was
but
wrong.
Could the banks foresee that?
The banks didn't care. All the banks were doing was selling mortgages so that they could feed the securitization vehicles, which is how they made their real fees. Just as happened in the US, people were selling fraudulent mortgages in the US to, say, immigrants, and packaging them up and selling them. Irish regulator at the time said there's no subprime securitization issue here in this country. Well, he was wrong. There was people selling bad mortgages. They were just not selling them to immigrants. They were selling them to Irish people. And they were packaged up and put into securitization vehicles.
Do you think there's an issue that Irish people, given the history, land tenure and never been able to get their own property under the British rules, that they're obsessed with property?
I think from an investment perspective, yes. But what was happening at the crash here was a young economy. Interest rates were going down. We had a young population all primed to buy houses. The building trade was exploding. And it was a perfect ground for mainly foreign banks to come in and start lending mortgages so they could package them up and securitize them. Yeah. So it was a whole series of events that led to this.
I'm just trying to give people the background in how we got there, Well,
we got there because there was about 12 lenders trying to get mortgages out the door. I have cases where people got a phone call, never thought about borrowing money, but, would you like to go on holidays? Do you want to do a bit of renovation? Look at your neighbour next door. He's just got a Range Rover. Do you want to remortgage? And it's only at 3%, blah, blah, blah. And they were sold. And everyone was in house prices are only going up. So what? When you get a mortgage, it's all about your affordability. If you can't afford it, over the duration of the mortgage, it's a missale. You should never have got it in the first place. The more money they pushed out, the more house prices went up, the more they could refinance. So they were fueling their own fire as such.
You know, I worked in the bank when I first left college. When I first left O'Connell schools, I worked in 34 College Green National Bank. Back then, I think that it was kind of fairly rigorous. I remember how hard it was for me to get a mortgage.
Yeah.
And it was $4,000.
What decade was that?
That was 1974.
Oh, yeah. Things only started to change in the 90s when the securitization vehicle became available. So what you had up to that was people borrowed over 20 years and depositors lent the money, and the bank had to make sure, lent the bank money overnight or over 6 months. The bank had to manage that very carefully, so it had to be very careful that people could afford. But once the securitization world opened up in the early 2000s, it meant that the bank could shift the risk of its mortgages to bondholders.
Who were the bondholders?
They'd be pension funds, any large institution looking to get AAA bonds, AA bonds. Mainly the pension funds started it.
So it's kind of like the banks had an insurance policy out here on their left.
More than an insurance policy, they sold the risk. So they raised, say, 300 million worth of mortgages, then packaged it all up and sold it to this securitization vehicle. And the bondholders who purchased those risks gave the money to the bank, and the bank was left managing the mortgage. So to the consumer's perspective, it's still my loan with X bank.
So, but do people have a loan with Bank of Ireland or the Vulture Fund?
Okay, well, let's define a vulture fund. A vulture fund is someone who's purchased non-performing loans. To bring some regulation, the Irish authorities brought in the Credit Servicing Act, which created debt servicers in 2018. And if a loan was to be sold by a bank, it had to be sold to a debt servicer, a regulated debt servicer. But they're just servicers. They just collect the money and pay it on to whoever really owns the loan. And the person who owns the loan, the beneficial owner, as opposed to the legal owner, the person who makes the profit out of it, they're private equity firms, and it's private. No one knows how they operate. They purchase these. They are the vultures. They set the strategy of how the money is going to be recovered. So people think they're dealing with the common debt servicers here, or Pepper, Mars Capital. They're just the collection agents for the vultures behind them. The vultures are large, mainly US institutions.
Like, could it be the mafia, for instance?
Anyone can put their money into a private equity firm. There'll be pensioners in there as well. We wouldn't have any idea. The key is that the men controlling these funds are the big hedge fund managers who are well known and earn millions. And there's no visibility on this at all.
And so now these poor distressed people are dealing with faceless entities. Don't answer the phone or throw them out.
No, it's not so much. I think at this stage there's 118,000 of our mortgages that, on the home loans that have been sold to these so-called vultures. Most of these people, consumers, citizens, do not want to talk to the vulture. But the vulture is talking to them all the time. So they're attempting to get more and more cash out of them. So let's talk about how the vultures buy these mortgages. So
say that to me again. These vultures ring them like once a week, once a month?
There'll be letters every couple of months. There'll be phone calls. It depends on what state the mortgage is. Let me step back and explain how they manage the mortgage book they buy. And we call a book, which is 300 mortgages. Mm-hmm. So let's say they buy a book of 300 mortgages, 900 million worth of mortgages. And they pay X to the bank for that. But X is just a percentage of the face value. No one knows, no one cares. How they value that.
Why does no one care?
Because it has no connection to the individual mortgages. They've just paid for the collection.
So if there's 900 mortgages worth 900 million, they could pay 200 million, 500 million, 900 million.
What will dictate what they pay is how much that mortgage book is yielding in cash terms. So if it's yielding 3%, they'll pay X,
Yeah.
etc. So it's driven by the cash that's coming off the book. The vultures.
That's all anybody cares about, is it?
That's cash flow is everything in
Cash is
banking.
king.
Cash is king. No one cares about whether it's interest or capital. Cash, when it arrives, when it goes out.
But everybody's like that.
No,
Like, I mean, I was like that when I was working.
Yeah.
It was just much money you're giving me.
Yeah.
And don't tell me about income tax. I just want, at the end of the day, what do I have? Is that it?
Yeah. Well, what's really nasty, insidious about is the next bit. So I bought the book as a vulture, yielding 3%. I give it to the debt servicer, and I say, I want you to drive that yield from 3, 4, 5, and the higher you drive the yield, the more bonuses I'll pay you, the more fees I'll pay you. And I don't care how you achieve that, because I'm not regulated and I don't give a damn. So the debt servicer then looks at all the mortgages. He has no idea what price was paid for them. All his job is to extract as much cash out of every mortgage holder as possible. And then the methods, this is the insidious, awful way these people are being treated. They will use every threat under the sun. They will never offer a restructure because that would mean giving away value. They're quite happy to wait till you're dead, but in the meantime, they will just keep coming back to see, is there more water in the well to extract from you?
So they don't like to do deals.
No, they're not allowed to do deals, because if you do a deal, you give up value. So if I'm collecting on a mortgage where the guy has a 100,000 due in 5 years' time at the end, I'm happy to wait till he's dead and I'll collect it from his estate. But in the meantime, I'll just chase him for as much as he's got. So the term mortgage prisoners is often used, but it's not appropriate here because a prisoner generally has an expiry date on his sentence. Here, people are just in penury for the rest of their lives. There's no deals, because deal would involve giving value away. So
I don't understand that really. So, like I know a guy and he's actually a barrister, and he has problem with pepper, yeah. And he says, "I'll pay you next June," and they sent him a summons instead, or an eviction notice or something. Why would they do that?
Because they want him to pay more and pay more often, and they're just keeping the pressure on of threats, because as a barrister he doesn't want to be in court. He doesn't know his rights, believe it or not, under consumer law, and that's very important. Everything
Well, hold on, he's a barrister.
Yeah, but our legal system is mainly a commercial one, where contract law is important. Consumers operate under a different set of rules, and it's mainly driven from Europe. It's called European consumer law. And the main directive on this was actually adopted in Ireland in 1995. It's called, and the title is very important, Unfair Terms in Consumer Contracts. And if there's unfair terms in a consumer contract, well then the contract can be null and voided, which is unheard of in commercial world. So our legal system finds it very hard to cope with this directive. So they've ignored it.
I'm not going to try and give you to take you off track, but there's a similar thing in the film world where they used to raise money in foreign. So the studio would raise money in every country in the world. So they'd pick 6 countries, they'd raise enough money to make the movie and a little bit to release it. And if the movie was a dud, they'd only spend half of the money they guaranteed to release it. But if it was a hit, they'd spend much more and earn much more. Now, what happened was the director, me, originally was an employee. But once you raise money in foreign, I become a deliverable item. And they can't fire me. Nobody ever pointed this out. But it seems a similar thing to what you're saying there, that it's a fail-safe. And the union would have a fail-safe mechanism to make sure you couldn't leave the job.
Yeah.
So these are American structures that are using their power of 350 million people and their huge technological power. They seem to be kind of coming with their tentacles into what should be social areas, housing, and they're capitalizing it. Is that right?
Yes. I mean, that's mortgages used to be raised by building societies and industrial societies, and it was only when bankers had a set of rules called Basel I and Basel II, that they all had to adhere to, that they had to be more selective. And because mortgages are very much a community product, it's good that people can borrow and buy houses. So the bankers, the international bankers who regulate global banking in the West, wanted to encourage mortgage lending. So to encourage it, the main way to encourage a banker to do something is lower his cost of capital, because capital is the banker's own money. So the less money the banker puts up, the happier he is. So he'll always get the same spread whether he lends to another bank or to a consumer, but the amount of capital he has to put at risk with a consumer is so low that his return on that is now significant. He loves it.
I don't explain that.
Well, it's like you going into a deal and someone said, well, if you go into this deal, you only have to put up €2. But if you go into this one, you only have to put up 50 cents. But they both have the same return. Which one are you going to take?
That's the same as raising money in foreign.
Yeah.
Originally the studios put the money up. Then they used to raise it in foreign. They put no money up. They were in profit before they started the movie. They couldn't lose. And that's how they made movies for 20 years.
Yeah.
So,
and this is how bankers have made a fortune out of securitizations and mortgage business.
Are you saying there's some guy in a little office on a phone ringing people all over Ireland every day, threatening them and putting them under pressure?
Yeah. Your file goes around in circles. They never, you might go quiet for 6 months and then it comes back up. You get a letter. There's a whole series of letters you get before you arrive in court, but they're all threatening the same direction.
Where are these people making the calls from?
From call centres operated by the debt servicers
in Ireland.
In Ireland, they're all in Ireland. The two major ones.
And the letters are in Ireland.
Yeah, it's all been issued. It's Irish citizens putting significant pressure on Irish citizens on behalf of overseas investors.
Wow. And so are these young people who've been employed by...
Yeah, they don't even know what they're doing. I've listened to some of the phone calls. They're just going through a script, and they've effectively weaponized the Irish judicial system with this form of threat. I mean, let's step back. Consumers should not be in the legal system. They should not be in the court. The Oireachtas set up the Ombudsman Act it amended at last in 2017. And the judiciary have said that's where consumers should be for financial services, with the Financial Services and Pensions Ombudsman. But the trouble with a bad mortgage, a non-suitable mortgage, is the consumer doesn't have the expertise to explain to anyone why it's bad. So he has no representation, which is a breach of the principle of effectiveness. He has no access to justice. If he goes to the Ombudsman says, I have the bank here on the left-hand side and I have the consumer on the right-hand side. As far as I'm concerned, you are equal parties. Now let's get into mediation. Consumer has not a hope. The bank has lawyers, it has knowledge. And that's why the European Union created this directive to protect the consumer against these powerful individuals.
Powerful individuals or companies?
Sorry, powerful companies.
Yeah.
And recognise the imbalance. So when I called you up, Jim, and sold you a million euro mortgage that you didn't have to pay any capital till 30 years' time. I was breaching all the rules that I've agreed with the regulators so I could be in the mortgage business and get this lower capital charge. I was breaching all those just to get €1 million worth of mortgage on my books so I could ship it off to someone else. So I was heavily incentivized to sell you. Now, we go on to, you asked me earlier, why were the mortgages sold to vultures? So the first set of banks went bust. So they needed
We're talking 2008 now.
Yeah, right at the start, 9, 10. There was a lot of, let's say the more quasi-banks, the mortgage lenders without a bank license, they went bust. They had to sell their mortgages to someone. That's when the likes of Pepper first came in. But as we progressed through the liquidity crisis, which was the Irish banking crisis, because of NAMA and other initiatives, we solved the liquidity crisis, which is a cash flow crisis. So there was no pressure for any bank to sell its mortgages. However, around 2016, the European Central Bank said, hold on, I know you've all these mortgages on your books. They're a distraction. I know you've provided for them, but they're a distraction. We want you to sell them so you're ready for the next crisis. So the Irish banks who remained, including foreign banks that had operations here, had to sell their mortgages. They were just told to by the European Central Bank. Or else they would be screwed with a higher cost of capital. That was the stick. So that's why they sold. They had no choice. They didn't want to.
But on the one hand, you're saying the European rules are like socialist rules. They're protecting the consumer. But here they just seem to be destroying the consumer in 2016. You have to sell the mortgages.
Yeah, because there's nobody looking after consumer protection here. The commission is it Consumer Competition and Consumer Protection Commission. They only have in their legislation educational requirements.
And many people did the European Union. In many countries did they do this to you have to sell your loans?
Across all. You have to lower your non-performing loans below 5% of that category.
And could you sell to another European country?
You could sell to anyone you like. Well, sorry, they did sell to anyone they like. That gets back to, could they sell? Should they? Were they allowed legally? My view is no, because it's a consumer contract, and if there was a risk at the start that your loan could be sold to a private operation operating out of the US, well, then that should have been clearly disclosed in your loan offer.
But then, let me just ask you, try to understand this. If the banks were told to sell the loan, should they not have said, well, this is a consumer loan, like, we can't sell it because we're damaging the consumer,
You mean, should the bank have had some consciousness?
Yeah, and also but to protect themselves to keep the loan, that we're making money for them.
No, they just, the European Central Bank rules everything. They said you got to sell them, and the Irish Central Bank is just a sub-office of the European Central Bank.
But if you're saying, and I'm trying to understand, if the European Central Bank created the problem and the European legal system defends the consumer, will the banks not say, well, we were made to do it by Europe Central Bank?
Yeah, I'm sure they will, but that's not the issue. The issue is what is your contract today, and has that on fair terms? It doesn't matter who originated or who owns it. From consumers' perspective, is what is the consumer's position today? Does he have a mortgage with on fair terms in it? And those 118,000 mortgages that I've looked at on a large sample basis, I've looked at their underwriting when they originally sold. Originally originated, we say sold to the consumer, they all breach on fair terms.
How much money are we talking? all the mortgages together, 100,000, yeah? How much would they generally be? 50 grand?
Face
100?
value, 300 grand would be an average. So we're talking 30 billion,
30 billion.
100,000 by 3,
Yeah.
by
About
300.
a fifth of the total collapse that we had.
Yeah, but more importantly, it's 15% of all consumer mortgages, residential home mortgages. 15%. I mean, it's 250,000 people who are in long-term stress.
And why has this not hit like the way homelessness is?
Because these individuals are divided, probably a bit ashamed, don't talk about it, and there's an illusion that there is no problem because there are effectively no home repossessions. I think in the last quarter, September, that I looked at, there was 26 home repossessions, and most of those were voluntary. So we don't have someone being dragged out of their house on prime time.
Yeah.
And that gives the illusion there's no issue. But as I said, these people who are managing these mortgages are not looking to repossess. They're just looking to extract cash from the individual. So they're torturing them. It's like the dripping water torture. It's just continually getting more cash out of them, bringing them to the edge, even getting a possession order granted, but not executing it. That's what's so evil about this. So a regulator looking at this says there's no issues. So no one's losing their house. They're all fine. But when you go down below the surface, Central Bank even issued one of their economists issued a report last February, which clearly showed what the interest rates these debt servicers are charging. So, and this is a really important point, is when you go into a bank, whether it was 2006 or today, you generally sign up to what's called their standard variable rate. And the bank can vary that any day, any way it likes. It's for sole discretion, and that's fine. But there is a pressure on the bank to be competitive, to get new business, to stay at peace with its current customers, not lose them. So it has a pressure to keep that standard variable. So a lot of the 118,000 mortgages, good 70% of them had this standard variable of the bank embedded in them. So when they were sold, I asked, how could that, what is the vulture now using? And the bottom line is he's using whatever he feels like, which to me is wrong. But the central bank noted that they were charging interest rates up to 9% when people still in the banking industry were paying 3.7%.
So let me get this straight. If they were charging 9% and they bought them at a 50% face value, that means they're charging 18%.
Yeah. They're not getting all of the 9% in cash.
No,
but they're accruing that much value, yes.
So they're basically money lenders.
Yeah, they've refinanced. Yeah. They've refinanced the banks. So they are lending to the banks.
But should it not be this way? The question, why should it be that mortgages are treated any different to any other capitalist asset?
Why should it not? Why should they not?
Yeah.
Well, for two reasons. One, the contracts didn't allow for these sales, while most commercial loan contracts do allow for the bank to assign or sell or transfer. These didn't. Back in the bad old days, pre-Celtic or Celtic Tiger days, the bank never anticipated they would have to sell these, except to a securitization vehicle. So it was never anticipated. Therefore, this risk was never communicated.
All right. Explain the difference between a securitization vehicle and a vulture fund.
Okay. So for funding purposes, banks like to securitize their mortgages, and they have a clause in the mortgage that's brought to your attention as a consumer that they may securitize your loan.
Yeah.
But the clause always says, but the bank will retain interest rate management and arrears management. So you're still dealing with the bank on those two matters, which are the most important ones. There are no clauses in these contracts that say you could be sold to a private equity firm who want to make as much money as possible. So therefore, the contracts never anticipated this sale.
But then if there's a breach of contract for everybody, why don't they take a breach of contract action?
Well, I am.
Okay.
That's what my whole business is about, is lining up all the consumer rights that have been breached in this particular segment. So 118,000
But do you have to go to court?
No, my first point of call is the Financial Services and Pensions Ombudsman. I mean, the courts have already recognised that's where consumers should be. So that's where I take them. He can award compensation of up to $500,000, which is more than adequate for most consumers. So that's the right place.
Have you ever got one?
We have hundreds lodged with the Ombudsman, but he's taking his time.
So how can you pressure him?
We've taken him to court, and we've got a decision in our favour for him to review his process, and we're still waiting for him after 2 years to review that process. But in the meantime, we are focused on, one, collecting as many of these claims as possible, because we'll do that for free.
If it's 30 billion and we collected 13 billion from Apple, from the EU, and we have 200 billion on some fund that we collected from all these corporations in America, why couldn't we solve this 30 billion problem? Like, take them back to some Irish bank that we create.
Oh no, I mean, that's getting into putting loads of band-aids over the problem. Let's get back to the real problem. The car had no wheels when it was sold.
Yeah.
Whoever chooses to own that contract now has to pay compensation for that act. How we solve it and refinance people, that's another day's. There's been a stabbing.
Yeah.
Let's focus on the stabbing and who did it and what the compensation is for that.
Is the case against the original bank or the vultures?
The case is against the contract holder. So if the original bank still holds the contract, it's against them. If they've sold it, all the consumer rights travel with that sale.
But sometimes they sell the service of the mortgage and not the actual mortgage. Isn't that right?
In this case, the mortgages have been sold to vultures because the European Central Bank insists on what's called a true sale.
So what's all that talk that goes on? You know it around Ireland. There's an awful lot of people who say that Peppers and Mars and what don't own the mortgage, and if you go into court and say, show me the deeds, they're not able to.
They're all, to me, I have no interest. They're all technical arguments. If you were wronged at the start, let's focus on that wrong. The fact that someone, didn't register it in time, or they're all technicalities as far as I'm concerned. You were wronged when you were sold the mortgage at inception. You couldn't afford it. You were bound to default at some stage.
Yeah. But how do you do what you do? Like, how do you survive doing it? I mean, do you have to charge the people or what when they come to you?
Well, I'm just about surviving, but
yeah,
we did hit a roadblock last year, and then we solved it with one of our current offerings. So at the moment, my objective is to get 118,000 mortgages registered for free to get a claim going through the Ombudsman, and we'll fight it all the way to the European Court of Justice. So that's our main offering. Free option. Just register your mortgage and
register it with who?
With misselling.ie.
Okay.
It's very simple. We just require a few details, and then if we review it and tell you very quickly if you are missold or not, if you have a non-suitable.
And what does it mean, registering it with you?
Just filling out your name, address of the property, the amount you borrowed, the year you borrowed.
But you don't take ownership, do you?
Oh no, we just now. It's done through a law firm, Barry Lyons Solicitors, and we create a case for you against and file it with the Ombudsman. File it with the debt servicer first, and then when he rejects it, we file it with the Ombudsman. And
at liberty to say what percentage of the 118,000 you know?
We've only 300 or 400 registered because we've only upped the ante this year because we have to solve the the immediate problem, which is the 12,000 mortgages that are in some form of legal process, being threatened with real issues today. And they've been threatened for 10 years, but there is more activity as the...
So 12,000 is critical condition, you mean?
Yeah, so we offer...
They're in intensive care.
Yeah, so as well as running a long-term, as well as assessing and saying you have a compensation claim, we then offer a whole package to protect them against the vulture while their main investigation is ongoing.
Would you say it's similar? I remember somebody had a heart problem here and went into the hospital, and they wouldn't let him out because they thought he had insurance to pay. And when they found out he didn't, all the thing went by the board, and they asked him to leave. So is it kind of like we have loads of people in hospital, 10% are in critical care, but the rest we want to keep in the hospital because we're making money out of them?
No, I don't make money until I
Not
win.
You. I'm talking about that's what the vulture fund.
Oh yes, that's what the vulture fund. Yeah.
And who are you? You're the person going round the hospital saying, how were you damaged? How were you hurt? You're kind of like a personal injury guy, but you're with mortgages. Is that it?
Yeah, that's a good way of putting it. It is. You have been injured personally by having this burden attached to you that was wrong from the start.
Now, Ben, the only reason I'm saying this, because I respect what you do, and I think you're doing a great job, and I really love the attempt. But I love when things will work. So personal injury works. And I'm trying to figure how you get your thing to a...
Okay, well, that's... My analogy is we have... Our basic product's called Legal Protect Basic. And that's, long-term compensation claim costs you nothing. But we have Legal Protect Gold. And we charge €99, including VAT, a month for this policy. And it's akin to selling you fire insurance when your house is on fire at the same time. So we will look after you through the court process if you sign up to Gold. So we'll step in. We'll start to write to once we've established you are a missed sale, we'll step in, we'll write to the debt servicer and say, there's now a claim, stop. Then we write to the debt service solicitor and say, there's a claim here, consumer claim with the Ombudsman, and under Section 49 of that law, you've got to stop all actions.
And how many people do you have in that Gold?
We launched it in February, and we've just under 100 now. So, but we haven't really launched. We've just remarketed the product as an easier to understand one just this month, and we start advertising again in September.
I mean, what I hear in the legal circles is the talk of champerty. Could that be called that?
No, because I'm not participating in anyone's win. I charge fixed fees. Or sorry, the solicitor firm operating this charges fixed fees.
Yeah.
I'm a servicer to him.
Yeah.
Or Misselling as a servicer. Champerty is where you participate.
Yeah.
And fund. But it's the participation. So we charge a fixed fee if we win compensation in 5 or 6 years. The day-to-day product is a legal fee coverage policy.
But do people get peace of mind that they're not getting called every day and not getting hassled with letters?
That's the objective, yeah. That we give them the peace of mind. We've used that word.
But does that happen, or do they still...
Yeah, no. They can... as soon as they sign up to us, they can ask the vulture to stop the phone calls, that they only want to receive post, and can the vulture please redirect the post to Barry Lyne solicitors. So yeah, they could...
And do they do that?
We have had a few, and the vultures have ignored them.
Mm-hmm.
But that's just part of the fight.
Yeah.
They've accepted it in some cases, but it's a fight, yeah. But our goal product is to bring peace of mind.
Mm-hmm.
These people are stressed to hell. They've been alone, and we're trying to just give them the comfort. We have a whole process to look after them. And that's why I'm talking to you today. I'm trying to get out the message that there is a solution here. It won't be clean and complete for years, but there is an interim solution.
Are you like the Samaritans?
Oh, there is a little bit of altruism here from my perspective, but we're trying to structure it. It's trying to structure it like a class action, but they're not allowed in this country.
Yeah.
So everyone pays us €80 a month plus VAT, but the first few in the door to court, we will look after, knowing that the rest case will be improved by the first few. So, we've already been to the High Court, so we have the grounds. Most importantly, I have a complete legal merits paper by senior counsels on our case under European law. So we have no doubt we'll win. The issue is, when do we get compensation paid to our customers? Because banks will always fight.
You have a senior counsel banking expert, or what is it?
No, the banking expertise is me.
Yeah.
Because the real risk analysis is me. I present the risk analysis to the court. It's the court's job to deem it unfair or not. So we would use senior counsel in making sure our presentation of the risks is in line with what a court can deal with.
Yeah.
But remember, we're outside the rules of contract law. For a consumer, the contract can be torn up if there's unfair terms. The European Court of Justice has been very clear. Was there material risks that were not communicated to the consumer? And if there was, then the contract's
This is very
void.
interesting. Like, I had a similar thing in America. And I told you about raising money in foreign. And I was a director and I had a problem with the company. And I just simply got fed up because I couldn't be fired. Like, I wanted to be fired, but I couldn't be fired. So I said, well, I'll take my name off. But I couldn't take my name off. The way it was structured with the union, they had first a meeting where your rights interfered with, and then they did a second meeting where it was a producer and a director, and there had to be a majority to allow you to take your name off. And guess what? For 30 years, nobody ever had a majority, because it was a fail-safe mechanism to keep the system working, which you can understand.
Yeah.
So the fail-safe mechanism here to keep the system working is the vulture funds. They're the fuse. They're in the fuse box, and you want to blow the fuse. That's what the government think.
Yes.
Okay.
And I could bring down the entire banking system, so getting compensation and justice for the 15% may put the 85% at risk. That's, I think, the establishment's view, and that vultures are needed. And neither of those theories stands ground for me.
Yeah, I just want to draw the analogy for you. When I was in that situation, in France, you can't assign your moral rights. In other words, if you sign a contract to say, I give up my moral rights or my directing rights or all my rights because now I'm getting money from you, they say you could only sign that if you were insane. That's the French view.
Right.
Right? So if you took your name off in France, the problem for them would be everybody else would say he took his name off in France and we're all going after it. Right. It's kind of like the battering ram. Where is the battering ram that can open the door for these people? Do you think, because I'm a bit like sitting there thinking, oh my God, the government are going to really hate you. But now when you're explaining it to me, it's not a problem that's off the scale, 30 billion. But people are being terrorized and beaten for a problem that in terms of the collapse in 2008 seems minor.
Yes. Well, there's no financial burden on this country. These loans have been sold. The banks have already been recapitalised. The write-downs have been taken. The write-downs haven't been given.
Some people say that the loans will come back to the banks if there's a crash, not to the vulture funds.
No, they can't, because the European Central Bank makes sure these loans are gone from the banking system. They are sitting outside the banking system, and any compensation that those vultures have to pay has nothing to do with this country. That's a risk they bought, and they've got to manage it. We've what I think the establishment, let's say, believes is that vultures are a natural part of the banking system.
Yeah.
And that is true. And I'm not even questioning their position.
Why do you think that's true?
Because there are problems, and banks get into liquidity issues, shortage of cash. They need a vulture to come in and tidy it up.
You mean to clean up the dead bodies?
Yeah, to just take away all that
smell.
stuff, to allow everything to move on.
Yeah.
But not in consumer mortgages. They're not like any other commercial arrangement. They're very personal to people. The only asset is that person's ability to pay. Everyone thinks it's a house, but the house is not available. It's the person's ability to pay is the asset. And that's what
Why is the house not available?
Because it's their home. It's not like you buy your buy-to-let. You can always sell that when pressure comes on. But when someone buys a home, it's for life. It's to live in. It's to retire in. Therefore, the banks are getting, again, back to lower capital charges for doing this business. The business isn't of taking homes. The business isn't of lending, relying on the fact I'm going to take that home. The business is, can this guy afford this loan? Has he got the cash flow? Even in retirement, if I go that long, has he got the cash flow? That's the business. And the home is just to keep people focused, that we all take responsibility. But it's all about the cash flow. Can they afford it? And back in 2006, 7, 8, when they needed to get these mortgages out, sold, they didn't care about the cash flow. They didn't care about people's affordability because they thought, these people won't default because we'll take their house. We'll always threaten them with that. And that was a breach of all the social contract that the banks have with the regulator and the community when they're dealing in consumer mortgages. There is a social contract which the bankers' return for participating in that is a very low cost of capital.
Yeah.
And he abused that, yet still took the lower cost of capital.
And you were a banker, so you understand cost of capital. So what was the cost to the bank of the capital?
Well, the cost is their return. Remember, capital is the banker's own money.
Yeah.
So in the days before shareholders and equity raises, the banker took in money from one group of people and lent it out to another group of people. The regulators came along and said, you need to keep a bit of your own money in there just in case things go wrong. That's
like
capital.
You can't lend out all the money you have.
No, you must actually bring more of your own money. That's shareholders' money. That's your that's what you put up. So if I'm starting a bank tomorrow, I would say, I want to make 100 million worth of loans. The regulators say, looking at those loans, you have to keep 10% capital. I have to go off and find 10 million of my own money, put it into the structure. I'm still short 90, then I look for deposits of 90. So 90 coming in, 100 going out, and my own 10 going in and 10 going out. That 10 is my money. In residential mortgage lending, that 10 could be just 1. In commercial lending, it's 10. So I only have to put up 1 million.
Why is that?
Because mortgage lending has a social purpose, and the regulators wanted to ensure that the banks are incentivized to do that. Because if you think mortgages are very cheap, 3.6%, that's part of the reason is the cost of capital. But also the rules around who you can lend to, how much, what's their affordability, are quite strict. And in return for following those strict rules, you get the lower cost of capital, because capital is to support losses. So if you have strict rules, you have less losses. So it all kind of fits together. But that social contract was broken with bankers chasing volume to feed the securitization vehicles. So they were flogging, selling, whatever you want, everything they could, any amounts to any people. We all have heard stories of, well, we only wanted to renovate, but then my local branch manager said, well, why don't you just, why don't you take that holiday and get the new Range Rover? Everyone else is, and property prices are going up. What have you to lose? The banker should have been saying, I need to review your income over the next few years to see if you can even afford the renovation. But he didn't, because there was the underwriting rules were just being ignored. It was all driven by greed, effectively.
Is there any forum where these people can meet, apart from coming to you? Like, is there a Mansion House meeting? Is there a meeting? There's 100,000 of them. Like, they'd all fit in the Aviva, nearly.
People don't want to. The feedback I got from politicians over the years is people don't want to come up. There's deep shame around this, because there was a PR campaign run around 2010, 11, 12 by the Banking and Payments Federation, who people think, they use the term banking, they must be an official body. They're actually just the lobby group of the banks and now of the vulture funds. And the message that went out was, consumer in Ireland, you need to learn how to borrow responsibly. It was the antithesis of their obligations. They switched their obligations and threw it onto the consumer.
And the politicians were saying we borrowed beyond their means and all this.
Yeah, I talk to many politicians who keep wanting to blame themselves. I overborrowed, I should have known better. And I keep saying, look, European consumer law is there to protect you. There's a big, powerful bank, and excuse the language, Jim, but under European consumer law, the consumer's an idiot.
Yeah.
He doesn't know what he's doing. He's acting outside.
You're calling me an idiot now.
When it comes to borrowing and lending, it's not your field of expertise. You're acting outside your normal course of business.
I just signed a paper.
Yeah, because you trusted the bank.
No, literally, that's what everybody does.
Yeah.
They say that's where you sign.
Yeah, because the bank has a duty of care.
And has anybody ever read the contract when they signed the mortgage?
No, because it's preconceived or predetermined by the bank.
Would you help you if you had read it?
No.
So you're telling me even if you'd read it and raised issues, it wouldn't help you?
Yeah, it's what's missing in the contract is important.
Oh, I see, yeah.
So most of the European Court of Justice rulings against banks on mortgages have been about lack of transparency. Transparency of the risks the poor old consumer was undertaking without knowing. So we had in Eastern Europe, they were selling Swiss franc mortgages to Polish customers who earned their money in zlotys.
Yeah.
Without really, well, they obviously knew they had to repay in Swiss francs. And they had a vague idea that exchange rates. But the European Court of Justice says the banks didn't do enough to explain how risky, how this could all go pear-shaped. And therefore they found in favour of the consumer. And there's 280,000 mortgage claims in Poland being processed for this.
And what about all of us who took mortgages in Irish pounds and they changed to euros? That's not the same thing.
Oh God, that's before my time. I haven't thought about that. No, most of the abuse of the consumer happened here in 2004, 5, and it kind of went exponentially up to 7, 8 when it was crazy.
Back then everybody in the bank used to ring me. I had a personal manager. I got 2 of them, I think.
Yeah.
And then after that, I couldn't get a phone call.
Yeah, because they were heavily commissioned to get those mortgages out the door.
And what happened after 2008? They said, don't talk to anybody.
Yeah. When the banks hit a liquidity crisis, they had no money. Their own bank accounts were being drained. International investors were taking their deposits away. And that's when the Irish government stepped in and guaranteed all banks, which they couldn't afford to. And then Troika arrived.
But didn't the legal profession in Ireland were up to their neck in debt, were they not?
Yeah. But a lawyer borrowing money from a bank is acting outside the normal course of his business. So he's a consumer. This is all. I have to stress, this is all about consumers, nothing to do with commercial law or reality. It's about consumers who are protected under European law, very strongly connected.
But there's all these, I'm not saying this is true, there's all these stories that the legal people got good deals from the banks when the collapse happened.
That's not my experience talking to these lawyers who have worked it out, but probably with a little more clout, because the workout is a legal workout. As I said, the legal system in Ireland has been weaponized against the consumer. So most consumers, of my 118,000 by say 2 per mortgage, 250,000 people don't know the law. So when they get a threatening letter, they're scared. While the barristers and lawyers, when they get a threatening letter, they probably have a better chance of dealing with it. But I'm only interested in the consumer out there who's alone, is being threatened, who's effectively in penury. And it's not that there's a cover-up, they've just been ignored because...
But it takes years to get to the law anyway. How long does it take to get to consumer law?
Well, that's... The Ombudsman is very slow. And that's why we've created the Legal Protect Goal policy, because we recognise your house is on fire, you're in trouble now for 99 a month. We will put that fire out and you will have no risk. We will take away the threat of you losing your home. That's what we're offering. That's in a nutshell.
But, okay, and do you mean that? I mean...
Yeah. If I've assessed your mortgage as a missale, unsuitable, I'm then allowed to file with the Ombudsman. Once I've filed with the Ombudsman, Section 49 of the Ombudsman Act says very clearly, no one can take an action against you.
Wow. Okay, so now, no, that's good. But if the Ombudsman's slow, that slows everything down on the vulture funds, no?
Yeah.
So you're saying the vulture funds couldn't come after people for 5 years?
Until the Ombudsman has ruled. So if the Ombudsman takes 20 years, the vulture can't go near you for 20 years. And if the Ombudsman rules against you, we'll appeal that. So the Ombudsman's speed of service was a problem. But now, if you put aside the peace of mind, now it is an issue for the vultures. Because once someone has a valid claim, this Section 49 protects them from all those threatening letters.
Are you saying the Ombudsman is there, whatever is in England, with 3 letters, FCA or whatever?
No, very different. If there was an FCA here, it would be me. I'm the only person who cares about these consumers in this country. They've no support anywhere. I've tried. I've written to the Ombudsman, written to the Central Bank, written to the CCPC, Competition and Consumer Protection Agency, Commission. No one wants to help. There's just this... That's why we have this problem. I said I was a banker earlier on. I'm an accountant who's been a chief financial officer, a risk manager in banks. So I've spent my life controlling the bankers. So I know how they think, I know how they operate. So I'm not a banker. And I know when I came back and looked at what they were doing here in Ireland, I was aghast at just the misconduct.
Do you like bankers?
No.
Do you like lawyers?
No. But it's not a matter of like or dislike. These are people just following their own codes. Lawyers are professionals. They have a code of ethics. They have rules. Bankers don't. They talk about a profession. It's not a profession. A banker is not a profession, but they do have to operate with respect to consumers in a regulated environment.
But in the legal world, the LSRA or the Law Society, do you think they regulate?
Yeah, there is to follow the law. But remember, we're not talking about the law here. We're talking about consumer abuse.
Mm-hmm.
And the consumer abuse has been fought in the courts. It should never have been fought in the courts.
Mm-hmm.
It should have been fought with the ombudsman.
Mm-hmm.
That's who the Oireachtas dictated should look after consumer matters. Because the European principle of effectiveness says very clearly all consumers in the European Union should have access to justice. All consumers can't afford to go to court. It's just prohibitive. So the Oireachtas set up the ombudsman for that very reason.
So the Oireachtas is also over the Public Accounts Committee, are they?
Well, the Oireachtas, the Public Accounts Committee, the Finance Committee, they're all subcommittees of the Oireachtas.
Have they any teeth?
Yeah, but it's more just examining stuff as opposed to... Nothing's going to change in this country, Jim, unless a lawsuit or a law case is taken. That's the golden rule.
Asking you, if one went through the Public Accounts Committee over a bank issue, could that work? Have they got responsibility towards the government, the banks?
No, they have more responsibility to the operations of the Financial Services and Pension Ombudsman. See, the Oireachtas established that through an act, and therefore the Ombudsman is accountable to the Public Accounts Committee. It generally goes into the Finance Committee, but that's the accountability.
Mm-hmm.
So I have filed my reports with the Finance Committee, and I have to sad to say they've been parked.
Mm-hmm.
And they have set out how vultures operate, the despicable approach.
Mm-hmm.
But I think the establishment generally feels that let's not rock the boat. The crisis is gone. No one's complaining. No repossessions. There's no issue here. Let's move on.
Mm-hmm.
They don't see that there's 250,000 people dreading these envelopes coming through the door, wondering they're all now getting into their 60s.
Mm-hmm.
Their resilience is breaking down, and they don't know how they're going to pay this mortgage off. They haven't a hope. They can't plan. They can't improve their house. It's an awful existence, and I see it every day when I talk to these people. If you look at my testimonials, you'll see, thanks Ben, it's the best night's sleep we've had in ages. The people who get what protection we're offering. We have back to how can I afford it? I couldn't. I ran out of money last year. 4 years of research and investigation and legal fees. So that's why we came across the gold policy to help people. But we still couldn't charge them a lot because most of them have got into financial difficulty because of the unsuitable mortgage. So we kind of set it at as cheap we could, $99 a month. I think to protect your home is a good value. And we try and get as many of those so we can cover all our costs.
Yeah.
Because it is expensive.
So you need to get more of them.
Yeah. Well, it's not that I only need to get a couple of thousand to survive, but I would want the entire 12,000 to sign up and effectively start getting on with their life, as opposed to
how do you find the Oireachtas itself?
I think in my own dealings with politicians, I find they're in the mindset of I borrowed too much, it was my fault. The problem seems to be solved. The Department of Finance is saying nothing to see here, so I'm only interested in next week's soundbite, this month's crisis. So we all know how politicians operate. There's just no one body focused on this who are incentivized to do something. That should be the FCA equivalent here, but no.
I'll ask you, how did you discover that the vast majority of mortgages sold to venture funds were missold? Were they actually missold?
Yeah. So John McGuinness was head of the Finance Committee in 2018-19, and he asked the chief executives of all the major banks here, would they entertain a review, a solution for the mortgages they had to sell. as opposed to selling them to vulture funds. So myself and a group undertook to do that review, and the more I looked into the mortgages, the underwriting that was happening at the time, I realised this looks like mis-selling. So then I went through the period of discovery where I gained about 100 customers, and I actually sent discovery requests under GDPR to the banks to get all the items. And just as a controller of bankers, I know exactly what should have been in those files and what was missing. And that's how I came across it. So it's all evidenced by me.
And why do they not give it out in GDPR? Do they just use that?
Well, it's more what's not in their files. That's what I'm interested in. It's the lack of transparency. There should have been more in the files. There should have been more communication to the consumer.
Okay.
So, you're familiar with, you've seen loan offers and they have warnings. Those warnings are dictated by the Consumer Credit Act and other things. If they were to do their job properly and meet the suitability requirements and the warnings, they should have put statements in your loan offer at the start, such as, warning, we have not assessed your affordability. Therefore, it is doubtful you can afford this mortgage and will eventually default at some stage. At which point we will sell your loan to a third party that you've never heard of, who can charge you any interest rate you like. And that will happen after 3 missed payments. Now imagine you read that warning. What would you think? Think twice about how much you're borrowing, wouldn't you? If it's your home, you'd probably say, no, sorry, I don't like this. But at least you'd have a chance to make a decision. But the fact they didn't issue that warning, that's what I'm looking for, what they didn't do. Then I have to look at their own underwriting, because each bank has an underwriting set of rules which the regulator will look at to give them that lower cost of capital.
And what was the worst bank?
It's probably those what I call subprime lenders that came in, like GE Money, NUA Home Loans. They purely were springboard. They were created just to feed securitization vehicles internationally.
Was Anglo bad?
Well, Anglo didn't do any consumer lending, so nothing to see there. No consumer lending, no. It dealt with high net worth individuals, but not under the consumer. So they dealt with guys who were rich developers or in an individual names, but they weren't acting outside the normal course of their business.
Okay.
The key is European law protects the person acting outside their normal course of business. It assumes you are ignorant, and you are ignorant. But what most people know about risk management and finance, you could write on the back of a stamp.
Yeah, but if a developer is working within his sphere of influence, if I'm building a house, am I outside it?
If you're building a house, well, who's wronged you here? If you're building the house,
who's wronged me would be the bank who loaned me the money to build it without a bond or without any.
Well, the bank's just lending you the money. The bank needs to say, Jim, can you afford this payment? And if they properly assess that you can afford it and that you're not breaking the law in what you're up to, they're not funding some illegal activities.
What if I was breaking the law?
Well, then it'd be about, did the bank do sufficient due diligence?
Okay.
It'd be very hard, depend on what law you were breaking.
What if I was breaking planning laws and title laws?
Well, then the bank should have hired a solicitor to ensure that title was capable of being conveyanced to the bank or secured by the bank. So that's how banks protect themselves, that you have not adhered. Planning is part of the title. So if you don't have planning, you don't have proper title, therefore you can't get a secured loan. So there is an onus on banks to make sure they have access to title. But no, the main issue is affordability.
I just ask you there, and I don't want to spend long on this, but so if I have a fraudulent title document, whose responsibility is that?
Well, who gave it to you?
a legal firm.
Yeah, well, if you employ the legal firm, then they have a duty of care to you because you're a consumer.
Mhm.
You know nothing about law and title, and that duty of care. If they were negligent, well, then yes, you have a case against them. The duty of care is the most important thing.
Yeah.
Is
a duty of care a consumer issue or a legal issue?
It covers conduct in banking. It goes beyond law, but generally it's thrown up in the legal environment. Because if one party has a duty of care, well, then all bets are off. It's not an equal relationship. In 2001, the Central Bank of Ireland issued what was the first Consumer Protection Code. It was very short. It was only 2.5 pages long. But it said all key material risks must be communicated to the consumer.
Yeah.
That's duty of care established in just one line.
But Ben, I'm just trying to think for your own personal sanity. I mean, couldn't you be working in banking and doing your stuff and making much more money? And
yeah, I kind of getting on in years, Jim. I'm fed up with that. Just when I discovered this, I just couldn't let it go. It's
and
too
have you
serious.
Family yourself?
Yes, I've 2 daughters. I'm divorced. I did have an interest-only mortgage.
Wow.
But I wouldn't class mine as a missale. But most people's were.
And what age are your daughters?
Oh, they're late 20s, early 30s.
But do they have places?
Yes, but they weren't part of this.
I know, but I'm just wondering, are they able to get a mortgage themselves?
One is, and the other is a struggling nurse who obviously has challenges, but will get there, hopefully.
Yeah. And your ex, where's she?
In Fosterbrook, which is in Booterstown, I think, South Dublin. So yeah, no, I'm fine. I have lost a lot of money on this, but it's, I hope it's not good money after bad, and it's now important to me. It's very important. I've worked with these vulture funds. I've sat across the table from them. I know how they think. You can forget empathy. You can forget doing the right thing. This is all about bottom lines.
Yeah.
So we took a community-based banking product and we put it with the worst form of shadow banking that exists. That is despicable.
It's kind of a wonderful life. Do you know that movie?
Yes.
Banker.
Yeah. And
he gives everybody little loans, and the other bad banker is kind of like the vulture fund, isn't he?
Yeah.
Yeah. But are you like your man in A Wonderful Life? What's his name? Jimmy Stewart. Is that who you're trying to be?
No. I'm just I've just seen a bunch of not particularly nice people ravage my friends, family, and no one here understands banking. No one in Ireland really understands. We have retail banks, but they just sell products. The real bankers exist in
Nobody here in Ireland understands law. Nobody understands European law. The politicians don't understand European law. They probably don't understand Irish law.
No, well, European consumer law has certainly been ignored because the fact it can result in a contract being torn up is sort of something very hard for lawyers to deal with, that they just don't get that a contract could ever be torn up. Because the contract trumps everything in their world. But the European Court of Justice has said there's an unfair relationship here from the start. The bank wrote the contract, therefore.
So if you're entered into a contract that's unfair, is that a consumer or legal issue?
It's a legal issue.
Okay.
It's the courts and the ombudsman responsibility to call on fair terms. It's my job as a banker to give them the knowledge and expertise to make that decision. It's not it's a legal, the European directive, it's law. Therefore, I'm a banking expert. All I can say is this was a material risk. It should have been communicated for the following reasons. But it is up to the court to say, yes, we can clearly see this is in line with European Court of Justice rulings.
And are some of the people that you're dealing with the people who end up homeless?
No. My customers are just mentally homeless because they don't feel it's their home. It's under constant threat. Go back to the Middle Ages, it's like being in a fort surrounded constantly by a sieging party. I mean, that's the sort of daily, weekly, monthly stress that these people are under.
And there's a battering ram at the door.
There's numerous battering rams, but the main one is the threat of repossession. A meaningless threat, but to people who get a piece of paper who don't know anything any better, they can't talk to anyone because they're shamed. They believe they were stupid to borrow this amount of money. And I spend my time saying, you didn't borrow it, it was sold to you.
Are we the only country in the world that deals with that word shame all the time? It comes up every time in Ireland, every time, in relation to everything. We're shamed about Bailey. We're shamed about this, that and the other. We're shamed we borrowed too much. You know, it just seems to be part of the culture.
As opposed to the American system of guilt. Yeah. They have guilt, we have shame. You'd like to think I'm getting off track now, but it's probably I grew up as a young Catholic.
Yeah,
I was made to feel ashamed all the time. Yeah. I've thrown off those feelings from an earlier age.
What's the difference between guilt and shame?
Guilt is personal. I feel guilty I didn't go to the gym this week. Yeah. Shame is, oh my God, if I've shamed my family. Yeah. Shame is Eastern. It's more, I've shamed the community. It's a public letdown. Right. I use the word shame because people won't talk to their kids. They won't go to a session. If some politician did run a webinar or something, they just don't want to be identified because they think they were ashamed of their stupidity, greed. They've been made feel that way because of the very successful PR campaigns.
Who invited the vultures to Ireland?
Yeah, Noonan always takes responsibility, but vultures float around or fly around the world sniffing out distress. No one invites them. Mm-hmm. They come when there's a problem. They can smell the money. I mean, there was the famous Blackstone, one of the biggest private equity firms. He said, the head of it said, I'm not investing in Greece, because Greece was in a worse situation than Ireland. I'm not investing in Greece until there's blood in the street. And I mean blood. And he actually did mean that. He meant he wanted to see the riots and clashes between police and citizen. Then he knew it was at rock bottom. Then he was going in. So this Irish politicians think they brought in the vultures, or if they do a roadshow to New York, they'll bring more. No, these guys, these sniff out distress.
And when did they know there was blood in the streets in Ireland?
Well, there was blood in... Well, sorry, I wouldn't say there was blood in the streets in Ireland. We didn't go out and riot. We didn't... they knew because Ireland's crash was the biggest crash in OECD history. It was phenomenal. I mean...
OECD is...
the organisation of... It's about 70 countries.
European.
It's got economics in there. It's a grouping that has countries from South Africa to UK to US, and it's kind of developed on capitalism sort of countries. We had a massive... I mean, we're talking... The securitization bonds, Irish reperforming bonds, trade on their own name because it's so big. So normally our stuff is lost in the roundings with France and Germany, but not in mortgages, distressed mortgages. It's so large. So, I was working for Bank of Ireland when the crash came, and we were making phone calls to try and get ourselves out of the liquidity crisis internationally. Everyone knew there was a problem. So.
And was anybody giving you a few bob?
Yeah, no, I managed to what we call deleverage a lot of businesses for Bank of Ireland, and as a result we remained, they remained a public company and did not need government bailout.
And what was the cost at that point for deleveraging?
Oh, well, Troika bailed out all the banks effectively, but under European funding rules, you're not allowed to give state aid. A state, and Troika would be a state, a combination of states. You're not allowed to give an advantage to a commercial company. So if AIB got X state aid, they would have to be punished in some other form to make up for that, such as sell off particular divisions. So I was part of the selling off to meet the state aid rules. They were very interesting times, but they were all about the commercial environment, and consumer mortgages that was such a mess. It was just parked. There was no liquidity crisis at the mortgage level because a lot of it had been securitized, so there was no cash problem. So there was no, bar those banks who went bust, there was no pressure to sell mortgages.
What was the pressure to do?
It was all focused on the commercial, the developers' loans, all that. There was no banks were told just work out the mortgages on your own.
So I think people have the idea we caused the crash, but it wasn't. You're saying it was developers.
No way. No, it wasn't developers. No, it was banks.
Yeah.
Banks poured money into this country, sold stuff they should never have sold, and that gave the idiots.
Well, you're saying banks poured money into the country. Did banks in the country not pour money out?
No, the banks in this country were losing market share and then had to join the party of misconduct.
Yeah.
At various levels. But it was overseas bankers came in here, they saw young population, loads of houses being built, loads of mortgage opportunities, and they just piled in and lent as much money to the consumer as
and
they
what
possibly.
banks were they? What was their names? That was the one you said earlier.
Oh, the popular one, Bank of Scotland would have been the one everyone recognises. But I don't like to get. They were all the same. I don't want to name individual banks.
Yeah, sure.
It's fair to say the local banks were slow to join the party, but because their market share was being eaten into, they had to. But very late in the day. No, it's thanks to overseas banks, and we all know who they are. And some of them have just left.
What role do debt services play, and who do they really work for?
This is we slightly covered this. Is who are vultures? Vultures are the people who have the beneficial ownership, but they give the loans legally to the debt servicers because the debt servicers have a regulated credit servicing license. So as a vulture, you cannot own a loan in this country, so you have to employ a debt servicer to own it.
Is Mars a debt
Mars
servicer?
and Pepper are the two main ones.
And Promontoria would be a vulture.
Yes.
People don't even know this.
No, it doesn't really matter for ordinary people. All that matters for them is there's a guy ringing them, there's a guy sending letters to them.
Well, when you walk out of this building, go down a few. I tried to buy a place in Eastmoreland Place from probably the highest real estate agent in Ireland and England, and they said, "Oh, look at Jim, we offered 800,000. It was two houses, two small houses behind gates, and you get it." So I offered 820, no, 840, no, 860. It was on the market for 850. So I offered more, and they said, "No, they won't take it." And 3 months later, it was sold for less than 800. What happened there?
Was this recent?
Yeah.
No idea. I mean,
Yeah.
because the world I'm in, houses don't get repossessed and sold.
Yeah.
I'm not that close to
Yeah.
what's
Okay.
going on. I mean, when you see irrational behaviour, it means you don't have all the facts. There's no one acting irrationally in the finance world. You just don't have all the facts.
Yeah.
So
When you say nobody's acting irrationally in the finance world, that's because they have to hit margins, money, things have to top up at the end of the evening.
yeah, because it's all driven by bottom line and numbers and cash flow. There's no emotion in this. There's no
Cash flow is my favourite thing that you said. It's like everything is cash flow from what you told me.
yeah. So I could have a ruling against me as a banker that I owe you 100 million. If I avoid paying you that 100 million for 15 years, I'm ahead.
Yeah.
That's the name of the game. People in Poland are still waiting, even though 6 years ago the European Court of Justice, because the banks there are holding back until they can afford to make the settlements.
Yeah.
It's all about the timing of cash.
That's what I'm trying to figure. So the prices, property crashed in 2008, 9, 10 and came back. So why are these people in distress if their properties are back to where they were?
In distress because the mortgage was unsuitable from day one. So it didn't matter whether they lost their job or didn't lose their job. The mortgage was unsuitable. So let's say they lost their job. So they had two events then, an unsuitable mortgage and they lost their job.
And the property collection.
But that's irrelevant, really.
That's hard for me to understand.
Because the property prices are just a virtual thing. Unless you sell and generate cash, it's irrelevant what property price. It helps confidence.
Mm-hmm.
It's a dreadful thing for confidence, actually, when prices go up. But all that matters is, how much do I have to pay each month and can I pay it? And an unsuitable mortgage would have said, you'll never be able to afford this. Because you could.
But most people think the opposite way, Ben. Most people think, get the mortgage, I'll find some way of paying it.
Yeah. Though they're not allowed to do. The bank should not allow that choice. Again, you are not borrowing. You are being sold.
But you're saying the regulations make it that they should lend as best they can because it's a social good.
No, they have to. They have to lend according to the rules of high standards of mortgage lending. That's the deal. The regulator says low cost of capital, but you got to stick to these rules.
And they don't.
And they didn't. They are now because they're policed within an inch of their life, but they didn't then. They just got the money out the door because they could securitize and move the risk offshore. Just, if you ever watched The Big Short, that happened here. Just instead of selling mortgages to immigrants, we were selling them to our own citizens who couldn't afford them.
Yeah. You know, The Big Short's very interesting to me because although it's a good movie, I think it's a very good movie, it's very hard for the ordinary person to understand.
Yeah.
Because the ordinary person only thinks in terms of $1,000. When you go up to 100 grand or 300 grand, they're like, that's me house. That's once in a lifetime.
Yeah.
They don't think that way.
Yeah.
You know, but if somebody lost $1,000, they'd be really angry. I'll give you an idea. Like, I was lucky, right? I suddenly was well-known film director making lots of money and I had a racehorse. My mind didn't work on how much is the race worth. Like, say, for instance, the Leisure's worth 300 grand. My mind was like, if I put 5 grand on each way, will I get it back? And I'd be much more angry, not angry, but much more concerned with the 5 each way than the 300 to win.
Yeah.
Does that make sense to
Yeah.
you? It was abstract, the 300.
Yeah. Well, I'll explain what you're talking about. You know, you want to buy an app.
Yeah.
And it's for $3.99, and
Yeah.
you're agonising over it because you know most apps are free. You're agonising over $3.99.
Yeah.
The relativity of pricing is fascinating, and how we're sold things and how they're priced, it's outside our control. how mortgages are sold to us. They're always sold as, you better do this now, or you will FOMO. You'll have a fear of missing out if you don't do this. House prices are going up. Get on the ladder.
Yeah.
It's sell, sell, sell. That's what the mortgage is. No different to your BMW.
Yeah.
Top class.
But there's
car.
two things going on. There's fear of missing out, and there's the pressure is fear of missing out.
But because the biggest decisions, financial decisions in our life are what? A mortgage, a pension. That's probably it. They're two massive ones.
Life insurance.
It's not really a cost unless you die. Then it's a great benefit. But they're the big ones.
But you get taxed on the pension, don't you?
Yeah, no. But in terms of making a decision, you're putting a massive amount of your money into a pension. You're making massive repayments on a mortgage relative to everything else. So food, home, and retirement. There's where most of your money's going. The European, I include that in food. It's very important to pair correctly.
Do you drink red wine?
Yes, I drink all wine. The European Union recognised that consumers of those products, because they're when they go wrong, they really destroy lives.
Mm-hmm.
So they put protections in 1995 so that all citizens of the EU were equally served by this directive.
Is the EU more restrictive than America?
Oh God, yeah. I don't think the Americans have the unfair terms in consumer contracts. Everyone is equal in America.
Have health.
No,
but so basically, American capitalist Wild West values are in the vulture funds, and Europe is in the kind of almost socialist world.
Yes. And the vultures have flown over into the socialist world and taken advantage of its legal system to extract as much cash as they can before they move on. In America, they had the same problem. Subprime mortgages sold. But because of their security, it just crashed. People moved out, a lot of homelessness, houses were sold, but they all moved on. Here, no one moved out. Prices crashed, and the banks just quietly tried to manage this, and then they sold them to vultures. But there was no moving on. So you have couples in their 60s now who are struggling with the same issue that should have been dealt with 20 years ago.
But in America, if you took out a loan and secured it on a property, you could just give the property back.
Yes, and there's no
You can't do
residual
that
rate.
here.
No, because they lend on cash flow, not the house. That's the difference.
They don't lend on cash flow in America?
No, they lend on the value of the house. So if you default, they take the house because that's what they're lending against. Here, if you default, it's your future income they've lent against. So they're not going to let you walk away.
How did that happen?
How did the Irish situation rise?
Because everybody in Ireland thinks that the second one, everybody thinks it's against your house.
Oh, it is. Legally, there's a charge on your house.
Yeah.
But lenders are not incentivized to rely on that security. They're incentivized, and when I mean incentivized, regulated, to lend on the cash flow available to you. So lots of people now today say, God, the bank turned me down, yet my loan to value that I was requiring is only 30%. I say that's because they looked at your cash flow, the ability to support that 30% loan, not the fact that you had 70% equity. That's irrelevant. Mm-hmm. So that's what people are experiencing today. That's what they should have experienced. Because if you think about it, it's self-fulfilling. The more money bankers lend, house prices go up. Because that's the main constraint. The bigger the mortgages people can get, the higher the house price. If they just lend willy-nilly without any affordability, house prices go up, and a guy walks back into the bank and says, I'm only looking for 70% of a much bigger number now, but I'm only looking for 70%. So you couldn't have a lending system like that. No, we don't care about the value of the house. That's what should have been said. We care about your ability to service the loan. because you're a consumer and you're protected. But we're going to ignore all that and give you as much money as you like because it suits us. That's what happened.
Yeah. And did it matter that we were kind of more like an American country than a European, than any other European country?
No, funny, the Americans and the UK all have an independent body responsible for consumer protection with teeth. We don't. It's bizarre.
And don't protect their own, is that what you're saying?
No, the central bank are conflicted because they're responsible for consumer protection and banking strength. Now, a bank and a consumer are obviously at odds if there's a problem. How can you represent both? In the UK, there's two separate bodies. Here we don't. In America, there are plenty of different bodies depending on your problem. But here we have everything's under the central bank.
How effective is the personal insolvency process in practice?
It's not great because the person goes into it without addressing the real issue, which is they were wronged at the very start. They got an unsuitable mortgage in 99% of cases. The PIA is just a deal done for a couple of years and you come out, people have come out the other side and had the interest rate doubled or tripled. So no, it's not a great process, and it shouldn't be the first point of you should be looking at your unfair terms.
Isn't it true that consumers need investment banking expertise to prove unfair terms? And are these experts usually with the vultures?
Yeah, because unfair terms are difficult to understand because it's about identifying material risks that were not communicated. Now, most consumers don't know what material risks exist and they were never told them. So de facto, they need another expert to say what the risks were. That's my USP because I know what those risks are and I'm prepared to do something about this. So I identify the risks. Many customers come to us and say, we've got 300 pages of GDPR discovery from the bank. Do you want it? And I say, no thanks. I have it all for every bank and lender. But more importantly, you don't have what you should have. I'm looking for the missing terms. The real unfair terms are missing terms. They're missing warnings of the horrendous, significant risk you're undertaking without even knowing it.
You mean it's like you're being arrested and nobody read your rights?
Yes.
Is that like it?
Yeah. You're being given a computer that you've just bought, or I've sold you a computer, and I didn't tell you that there's no on switch. So when you get home, you realize this is not suitable for me. There's nowhere, I can't switch it on.
Or the battery's going to go on fire.
Yeah. Probably that's more a different issue, a manufacturing issue. But if I go into a computer guy and I say, look, it's very important that I can manage the following programs. They require a lot of RAM, random access memory. And I get home and one of those programs is upgraded just recently and I find I've run out of RAM immediately. That product was never suitable. I described to the salesman why I needed this and he gave me an unsuitable product. You go into a bank and say, I want a mortgage to buy my home, and the bank sells you an interest-only mortgage and doesn't ask how you're going to pay off the capital. That's totally unsuitable. That's a very simple example. The risks underlying that interest-only are far more complex, and I wouldn't even go near the consumer in explaining them. But they're how we price banking products. So again, unfortunately, for the consumer to get justice, they need an expert. And this is not, you could say this is me flogging my own business, but I'm sorry, there is not too many experts available to the consumer that truly understand the risks in mortgage lending.
Okay.
And that's my expertise.
See, has any suicides happened in your experience?
It's very hard to connect suicides to, but there's certainly, I hear and receive emails with a lot of despair in them, desperation. it's the way the vultures behave is it's they're drip feeding the torture. So they're never doing enough to push anyone over the edge. They just have them constantly on edge. And that's what's awful about this. There's no plan. These people have no control. And you know, Jim, if you have no control, that's stress. Their homes, they don't know when their home's going to be taken. Some of them even rationalise, yeah, they'll never get my home. But that doesn't stop me in this state of...
But Ben, how do you convince people who are up the gazoo with worry to fork out another 90 quid or 100 quid a month? It's hard.
Yeah, no, I agree. And they have to decide their resources. They're in battle with the vulture. Do they keep paying every penny they possibly can to the vulture? That has to be their decision. Or do they pay me? I mean, we've tried to set it as low as possible, €80.
Is there a way that they pay you and stop paying the vulture?
They can do whatever they like, but I can't tell them to stop paying.
I would, but you can't, no?
No, I mean, I'm sure I'd be closed down by the central bank or someone, because I'd be putting a threat the whole banking system if people could decide on their own bat that they have a great case.
Yeah.
But all I can say is, and we've tried to...
And now, okay, let me ask you, has anybody stopped paying the vulture after they joined your thing?
Yes. And we did in the past offer a facility to put that saving into an escrow account to show good faith, but we're not offering that facility. But yes, people have looked at our policy, looked at the policy they've got, and made their decisions on their financial planning. But
yeah, but there's no way you can advise them to do that.
No.
But if they do that, you can offer them an escrow, like they take the money that they were to pay the vulture and put it into an account. Is that it?
Yeah. That's what we'd recommend. Obviously, if you can't afford what's being demanded of you, well then come up with an affordable amount and put it into your own savings account. Because mortgage will never be written off totally. So you should be saving for that day. But
so you're not asking for mortgages to be written off?
No, we're asking for compensation.
Yeah. But could compensation come in the form of mortgages being reduced?
Yes. So I'll give you how stark the numbers here, because we should have covered this. A 300,000 mortgage back in 2006 was one of the subprime lenders charging high interest rates, 6%. So you had this for 20 years. If you managed to pay 50% of the demanded payments, just 50% over 20 years, you would have paid them €260,000. So when the contract is null and voided, the compensation is calculated in the following way. The bank must repay you every penny that you have paid them. So the bank has to pay you 260. But you still owe the bank 300,000. So you owe them 300,000, they owe you 260, the mortgage goes down to 40.
And interest isn't
It's
into
every penny. No, it's cash. You have to pay back. Sorry, the bank has to pay back every penny of cash that you paid.
Why?
Because the contract's now null and void. So you need to put the consumer back in the position they were on day one.
I see.
That's what happens when a contract's null and void.
This is a very important point that we didn't hit really correctly.
No, the compensation levels are enormous here. For example, an interest only. If I get that proved to be null and void, the bank would only have to repay all the interest because you made no capital. So if you borrowed $1 million on interest only at 2%, that's over 20 years, that's 40%. 40% of $1 million, 400,000 is your compensation on $1 million.
Yeah.
So you now have to come up with 600 grand
Mm-hmm.
to get rid of the vulture, as opposed to $1 million plus.
Yeah.
Plus all the money you
Well,
paid
God
them.
bless you. I hope it works out. It seems fair. You seem to have a lot of empathy. You know, dentists really have a hard psychological time. Is it a psychologically difficult job?
Yeah, well, it's frustrating because I understand people's frustration. They've spent probably 15 years being promised stuff by people that couldn't deliver, had nothing to deliver. So the level of distrust here is enormous.
Well, who couldn't deliver?
Advisors, local solicitors were all offering people something that came to nothing.
Mm-hmm.
So a lot of cases went to court looking for this reckless lending, and then the courts eventually said there's no tort of reckless lending. So a lot of people wasted time and money and energy.
Mm-hmm.
So I'm coming along and I'm saying, I'm waving my European consumer law flag. I'm a banking expert. I'm from the dark side. I'm partnering with a well-established solicitor in Ireland who has credibility. And between the two of us, we're saying, because of the European Court of Justice, we know we're going to win here. It's a question of when. And it's a matter of how we protect you while we're trying to win. And that's the frustration. It's to build that level of trust. And thank you for this interview, because I would hope you showing an interest and believing in what we're doing will help build that trust with the general public.
Yeah, I hope so.
Key to me is the Irish media do not want to pick up this matter. Everyone seems to think the crash is gone, it's dealt with, let's move on. Banks are paying advertising, the government's advertising across the media, so no one's interested in rocking the boat. Yet there's 250,000 of our citizens in desperate despair.
Thank you, Ben.
Thank you.
Well done.